everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today we're taking a look at crude oil. Now, crude oil overall, yesterday, not really much to write home about, right? With FOMC day, along with inventories yesterday, crude oil really didn't get a whole lot going. And we can see that just by the price of the market, right? We opened here, and it did end up closing here with an end-of-day rally on the FOMC, but for the most part, the entirety of the day was stuck inside that first little bit. So when we come in today and we see a gap higher from yesterday's movement, it's likely that buyers bought into the overnight session for continuation up, and now they're taking some profit. We get a bear move down, buyers try coming in, but look how weak they are, right? Look at this rally compared to this rally. Right? Obviously, there is something drastically different, and if the buyers were super interested, why are they falling apart here? Why can't they get some better momentum going rather than this little piddly, not very good-looking bullishness? They're stuck around yesterday's high. We have a brick top candle, meaning no wick. As soon as the market opened, it started falling. They're just not getting anywhere. And when the market comes back and retests the prior high of day, the buyers give up and the sellers get a huge bear candle closing on its lows, completely taking back all of that morning drive higher from the buyers. And it ends up looking like a flag pattern, right? Big move down, flags out, and then we're looking for a continued breakdown. So a nice selling opportunity off the prior high of day to get that pullback going and looking for a continuation to the downside to at least fill the gap maybe a little bit further. They drive the market down, they get the gap fill, big strong bear candle closing underneath that gap, as well as underneath the moving average even. So very strong bearishness. And when the buyers try showing up, nothing, right? The buyers can't get any continuation, they're falling apart. Sellers try coming in, inside bar of that big bull bounce, and they really don't get anything either. So we're getting a trap after a trap after a trap. We're seeing a lot of back and forth traps. The buyers get a strong move up, and we form a micro double top. On a faster time frame, on a 1 minute chart, you'd see the double top a little bit easier, and then a bear candle right back down. That allows the sellers to take a secondary attempt down for the same reason we saw back here. Really weak rally, looking more like a flag, a breakdown of which should see another push down for a secondary leg. This was a very strong drive down, so sellers are going to be amped up to sell anyway. But then we start seeing what the buyers had here and here on the sell side. Huge amounts of wick, big wick, and then all of a sudden the sellers start putting it in. Big wick, big wick, big wick. We're not seeing that consistency. The sellers are running out of steam, and they can't even complete a proper looking wedge with a body on it, right? It's all wick. So with all of those wick failures down here, we get finally a good looking bear candle. It triggers in and immediately goes bull engulfing the opposite direction. Something is terribly wrong for the sell side, and that switches gears towards possible buying. We may be continuing that range that we saw yesterday just as a deviation higher instead, and that allows the buyers to swoop in and push the market back up for a big swing to the long side for a move back up into the earlier range from the morning session, the first candle of the day. We dig into that first candle of the day, and as soon as they start poking their head above it, immediately starts turning back around. And normally I wouldn't be a big fan of selling this early into a move, but like we were talking about in the room, the sellers don't want to sell this far down. What does that mean? Well, the sellers obviously don't want to sell low. They want to sell where then? They want to sell high. They want to sell at better prices. And what better place than the earlier entry point of that initial drive down? Comes back, right back to that break-even point, tries closing above it, immediately rejects. That is a very nice signal for sellers to try to come in and drive the market lower. If you were a little hesitant on taking that one, when you have doji follow-through and then continuation bearishness, the rest of the sellers will likely have sold there instead. So just a phenomenal day of both price action as well as market psychology. A lot of psychology again today, and good movement across the board, even if it was a range. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it useful, maybe a little bit entertaining, and we'll see you next time.